All right, welcome everyone. My name is Jacob Blackett. I'm with two amazing people, my managing partner, TJ Lockbodge at Holdfolio and Jakob Stein of Silverpoint Group. Today, we will be discussing our newest investment opportunity, Allegory Riverhaus, which is a 3-project deal. Our first 3-project deal we've offered with Holdfolio is composed of 2 apartment projects, which we're doing with Jakob and Silverpoint Group, and that's what we'll be discussing primarily today. But as an overview, we would like to mention that this has been a really great success, right, TJ?
Yeah, absolutely, Jacob. Super excited about all the success that we've had on opening day, which was last week. The funds came in, and we only have about 4 to 5% left in capping out our round. And so, huge thank you to everyone who's participated in this deal. We're really excited, and the overall thoughts on the 3-project deal is, our investors are seeing diversification with great projections and 3 amazing investment opportunities. So huge shout out to everyone who's invested with us, and we're really excited to round this investment raise out.
Yeah, that's important to mention. Thanks for mentioning that, TJ. We are about 94-95% funded. We had our biggest opening day ever in terms of the most capital we've ever had committed to any of our deals within the first 24 hours. And so we have a couple $100,000 left approximately, and today we'll be focusing on Riverhaus, Creekside, and Heritage Apartments. There's also a hotel development Allegory that's also comprised, but we've got the operating sponsor of the 2 apartment deals on the line today. So we're looking forward to diving in and learning a little bit more about these apartments and having a conversation about the assets and business plans. So with that being said, if you're not familiar with Holdfolio already, then we'll give you a quick background. In 2014, we set out to create partnerships from income producing real estate. So we have a lot of experience with single family homes, building single family home rental portfolios, and also apartments, primarily multifamily, and also some ground up development. And to date, we have around 2,400 total multifamily units across a portfolio of reaching now nearly $500 million in total asset value. And today we have Jakob Stein with Silverpoint Group with us. How are you doing today, Jakob?
Hi, how are you? I'm very good.
Doing really well. We've already done a deal with Jakob a little while ago. It's going really well. We really appreciate working with Jakob and his group because they're so responsive, really diligent, and have just been a great pleasure to work with in picking up great assets, but also in phenomenal markets as well, as we'll dive into a little bit more. So, Jakob, if you want to give us a little minute or two about the Silverpoint Group and yourself?
Yeah, sure. So hi, everybody. My name is Jakob Stein. As Jacob mentioned, this is not our first deal we're doing together. So, this is sort of, we're reconvening. So that's always good. So Silverpoint Group is basically, a real estate investment company, which we focus 100% currently on multifamily assets. We're actually sort of a child of an insurance company, a P&C carrier over here out on the East Coast, which has done an enormous amount of real estate investing through third parties. And at some point, they decided that, hey, why go out there if we can create our own company to invest, in real estate. So that's really how we started. We're a family-owned business, and we operate, on a very personal level. Every asset is checked out by us, which is, the family itself, and we're we always come along with a very, healthy piece of the investment. Um, so, we have our own interests aligned with the investors, obviously, because we're investors as well. So, that's basically, how we started. And, to date, we've got, over 2,000 apartment units and counting. So, we look for, we're very extremely focused on making sure that we get assets that are, have long-term, have longevity, through any market, up or down. Obviously, especially in the last, 18 months, the world has sort of gone topsy-turvy, and you can never know what's going to be. But we look for markets that have very strong fundamentals, and that will weather any storm. So to date we've done deals in very healthy North Carolina cities, and in Atlanta we've done a lot of deals, and we're looking in Texas as well. So previously we've done a deal in San Antonio, and now we're doing another deal right outside San Antonio, which is the Riverhaus deal, Riverhaus Creekside, which is a phenomenal opportunity. And so that's one of the deals we're doing. The other deal is in North Carolina, and that deal will, I guess, we'll talk about that second. But so, we can talk about Riverhaus first. And so basically, this opportunity came to us through the broker that sold us the previous deal. With that deal, we bought from Blackstone, and this deal we're buying from the Carlo Group, which is it's a partnership between Carlo and Ally Ryan. Ally Ryan is a local developer. They're out of Houston. A serious institutional developer, and and they're together with Carlo, who's the equity here, and they were looking for somebody who can buy an asset and professionally and take it down and do what they say they do. So that gave us the opportunity here to come in at sort of a below market price. So the story with the deal itself is it's 281 apartments. It's a brand new construction. Their first apartment that they rented was in March of 2020, sort of right, on the eve of COVID. And in about 12 months, they've leased up. They're currently, I was there actually on site last week, and they're 95% occupied and 96.5% pre-leased. They're not giving concessions anymore, and whatever there is already burning off and almost gone. So the property at this point is a fully stabilized property. You can't call it a lease up anymore. So we had the opportunity of sort of buying into this as a lease up deal, but at this point we're 100% fully done. So the idea here is we take this property. It's got a very strong cash flow. It's a beautiful property. It's the nicest property in the area. And we hold it, obviously, depending on market, call it the market temperature, wherever the market is going to be holding, in down the road, is how we'll deal with this asset. But principally, this could be a long-term hold asset. But we do have the way we're structuring our loans here is that we would be able to get out. We have an 18-month lockout from 18 months. So pretty much up to 5 years, we can get out any time and either do a refi or a sale. So that gives us ample opportunity to be able to either stay in if the market is not giving us a huge premium on a sale, or if the market is still giving us the premium they're giving us today, then we can maximize and sell out and take in that premium.
And Yaakov, if I could stop on that point there, it really gives us maximum flexibility in order to do what's best in certain market conditions, right? So like you mentioned, depending on the market conditions, loan options, whether it's going to be a refinance in the shorter term or a sell in a shorter term, or kind of moving those puzzle pieces. Is that how you perceive this kind of business plan in terms of refinance versus sell, or kind of what's your vision on that?
Yeah, absolutely. I mean, the key here obviously is to maximize our dollar for dollar. But it's always difficult to, to project down the road where the market will sort of, pay the most and give you the most benefit, especially today where, just the environment that we're in today, where today's market is giving such high premiums for multifamily deals. It's anyone's guess how long that's going to last. We hope it's going to last for forever, but it's just hard to make a business plan around that. So, we look at it in a way that, we try to be able to position ourselves that we can pivot to anywhere we can, which, usually on an asset of this type and of this size, it's difficult. It's a $50 million asset. How do you position it in a way that you can, get out easy? It's not that easy. But so we're taking a loan over here with, we're capitalizing the deal in a way that does give us that sort of, we should be able to be nimble, that we should be able to, maximize the market depending on what the market is doing. So, we feel that a deal like this, if we have to hold it for 7 years, 10 years, whatever, it's a phenomenal deal. The market is, the local market over there has got a growth rate that's like, through the roof. It's, CoStar is talking about a 5% annual growth rate for the next couple of years until 2026. That's a number that's just unheard of. So
Yeah.
it's, if we kept this for 10 years and it gave us that kind of growth rate, it would be a pity to sell it then. But
Yeah.
it's
at that, I think we'll talk on some more a little bit about the location, but it's just shown, like you mentioned, the height when the pandemic was getting going, lease up again, and you're adding over 20 leases a month, where have pushed this asset into stabilized from a lease up business model to now stabilized in very short time period. I think that speaks volumes to the area, the demographics, the location, and in terms of a long-term hold, that market, New Braunfels, is just perfectly positioned to really be fruitful. So
yeah,
it's very exciting.
Absolutely. And in fact, there's one other lease-up deal in the area, which is also showing a very similar kind of trend. So it's making us feel very good about what the future is going to be for this area. And currently at the property, they're already talking about raising rents. So that's the area's got a 95+% occupancy. It's a very healthy, growing area.
Yeah. Strong household income, well educated, in between two other phenomenal Texas markets, and so it's all great. We have some pretty incredible employers in the immediate market. Yaakov, you had mentioned the Amazon fulfillment and potentially some other employers coming down the line. You want to talk any bit on the employment side?
Yeah, it's obviously the area is drawing a lot of attention due to its proximity. I think number one to San Antonio, which is one of the strongest markets today in Texas, in the country actually, and as far as growth is concerned, and Austin. It's a little further from Austin than this with San Antonio, but Austin is a city that's absolutely exploding. And Tesla's new Gigafactory or whatever they call it is 45 minutes from there, a drive from there. So it's drawing an enormous amount of attention, to this corner of Texas, and it's people like sort of to go where there's new development and new, where there's a lot of people coming in, especially when you're talking about tech type of people. These are high paid people, and so it's just it's really drawing a lot of attention. And this particular corner pocket of where this asset is located is sort of in a greater like a new development up in town over there with retail, and it's right next door to a hospital, and it's got brand new retail there, and new multifamily, and so it's sort of, you know, the nicest pocket of town, the newest, nicest pocket of town with an enormous amount of growth. You know, you're close to everything. You're close to, you know, a tremendous amount of retail. You're literally, you know, down the block. It's walking distance to, you know, all that retail. You're walking distance to a hospital. So, you know, there's jobs very, very local, and, you know, and the area is growing with new jobs, and obviously, you know, you're located in between, you're sort of sandwiched between these two cities that are, you know, really pushing the envelope on where growth can go. So
Yeah.
Absolutely.
Yeah.
Yeah, I love the industry and job diversification there in the area. Yakov, you mentioned we looked at a ton of different industry logos. What I'm most excited about though is a few of the industries that, or one of the industries you mentioned is tech. Tech being something that is positioned for growth. You mentioned Tesla facility 45 minutes away. I mean, these are signs typically with areas that are attracting tech. You know, other companies do follow, and we're seeing the net migration from some of the coastal areas moving to these markets. And so it's very interesting, and that's what I really find attractive to this location. So
yeah,
it's awesome.
Yeah. You've got TJ. You've got the third fastest growing by percentage population. Talking about net migration, trying to figure out, you know, where people are going. It's
Yeah.
directly in this region and area. So with the brand new asset, we have some amazing amenities in addition to unit features. So the property is state of the art, really have some amazing unit features and also amenities to highlight. So lots of creature features, technology integrated directly with units, some keyless entries, really nice site plan as well. The pool is certainly a resort style, top of the line pool, and I think all of these amenities and unit features are all supported by the lease up and the demand that the property has been getting well accepted. Any notes on those unit features or amenities, Jakob, to highlight?
they're pretty much top of the market. You know, the other apartment complexes in the area are, for the most part, are not as you know, tip top as these units. They're brand new. They're also, you know, they got granite, and like you're saying, you know, they've got all the little tech features. You know, obviously the pool, you know, the amenity package, and, you know, they've got a club room and an exercise room, and, you know, it's absolutely gorgeous. So
also, what I thought was pretty timely is the computer lounge and library in terms of people working from home more and more and finding flex space and having a place to live where you can go down and feel like you're in a beautiful library or a lounge setting. I think also is a great asset. That I think that trend is not going anywhere, right? So having a brand new asset that is built for those trends is really a huge competitive advantage.
yeah.
Yeah, I'm loving the dog spawn gated dual dog park as well.
Yeah.
That's a very good
Yeah.
feature as well.
And so, of course, you have a beautiful asset, a great market, and also being able to get good performance out of that. So strong cash on cash returns that we're looking for on this investment of 11 to 13% during the hold, with an overall return of high teens, strong equity multiple on a 5-year investment, example investment. So really from that side, especially from a risk adjusted perspective, I mean, phenomenal for this type of asset market. Let's go ahead and go ahead and shift the conversation to heritage in North Carolina, right? So we have this beautiful A-class new build property, and then we have heritage, which is a 2000 build, a really a bread and butter value add opportunity. It's not old by any means, but old enough to be outdated and mismanaged enough to be very lucrative. And Yakov, I'd love to hear you talk through a little bit of the backstory and business plan on this asset.
Sure. Okay, so Heritage is a deal that we've actually been looking to buy for about two and a half years. We own the asset right down the block. From clubhouse to clubhouse, it's I think 0.8 of a mile. On Google Maps, so it's literally down the block. This asset is an asset that's owned currently by a company that we've bought previously 2 other assets from. So we know their form very well. We've been behind them twice now. And based on their current financials, we recognize the deal. So we sort of know what we can do behind these guys. And now, to their credit, they run the properties very, very nicely. Which is probably why there's so much opportunity, because they run their expenses extremely high. So they give us assets that are usually very, very clean, with a boatload of opportunity. They give us an opportunity, from a expense standpoint, as well as that they don't do any value add to their deals. So the units over here are 20-year-old units, and they've never been touched. So it's clean. There's really nothing to do on the property, from a deferred maintenance perspective. But on value add, we've got 100% value add opportunity, which is the best situation you can ask for on a value add deal. Which usually value adds come with a lot of hair. This is clean. So basically, what we've done across this, down the block on our other property, it's called Patriot Point. We picked it up in November of 2018, about 2.5 years ago. It's 240 units. We've renovated 130, 135 of the units approximately, and we're looking at $250 approximately on premium that we're getting. We've been able to run that property, between 92 and 96% occupied throughout the renovation. It's a very strong occupancy in the area. So, we've never even had any downtime from our renovation. We're getting whatever we ask for on our renovation. And, so we know the market, we know the prices, we know what we can get for it. And we have sort of the management and renovation team and scope that we need. It's running. It's just, we're just gonna sort of swing this right into our current operation, down the block. So for us, this is for us personally, this is a no-brainer, no-brainer deal. Yeah. And we've been waiting and waiting to get this deal, and so now we have the opportunity to do it, and we're looking, we're very excited. We think that there's a lot of opportunity.
I think potentially one of the only downsides is that it's not 243 units, right? Or 300 units, 140. So
yeah, it is what it is, Sure. Yeah, absolutely.
Well, that's great to know. You all have been diligent in tying this deal down. What I just want to highlight is the fact that you're already in this market with another asset that's currently operating and doing well, and you've worked in the past with this previous owner, and so this truly is a plug and play with your current operations, and that's what makes us so excited about it. And you're right, it truly is a no-brainer because of that. It's awesome.
Great. So with it being 2000 built, we have really respectable community features, amenities. Units are respectable. It's really kind of a T-ball approach here. Like you mentioned, that units haven't really touched or upgraded at all. So it's really an amazing opportunity for us to come in and renovate and also the operational play as well, like you mentioned. So it's great. The location is pretty incredible. It's in the Raleigh-Durham MSA, which is considered a hyper growth market with incredible job growth, population growth, strong education, healthcare. Really, it's quite amazing. Did you, Jakob, want to touch at all in terms of the entry to market and kind of demand and supply in this particular area?
Yes, I mean, in Hillsborough itself, which is sort of, if you go back a slide, you'll see that Hillsborough is sort of on the right, the top corner of, top, sort of western corner of the Raleigh Durham area. It's, in that little pocket, there's nothing going on. All the development is happening, in Durham proper, in Raleigh proper. There's nothing going on in Hillsborough. I mean, pretty much in Hillsborough, there are about 4 or 5 multifamily deals, which are fully occupied and getting a lot higher rents. So I mean, there's no from the way we see it, there's almost no reason why we can't raise rents, the full jack the rents, the full $300 and get it. If anybody wants to live in Hillsborough, it's pretty much the only rent they can pay. There's no competition. So I think that's the property, the area is also probably higher than 95% occupied. It's like 96 or 97% full. We know all the assets there. We've got when we'll own the 2 assets, we'll own pretty much half the units in town. It's a pretty clear cut situation over there. And obviously the area is like you mentioned is one of the best areas in the country. So,
yeah, great. And
one thing you didn't mention is that Apple just made an announcement, which this is really exciting for us. That announcement came out after we were in contract, which was good because if we wouldn't have been, I think the seller would have wanted more money for it. But they made that announcement that they're moving in. They should be coming in with 3,000 jobs. So I mean, that's really phenomenal for us.
yeah, incredible timing as well. You didn't have any insider knowledge of that,
No.
did you? Okay. Well, I thought we would touch on the rental comparables just to highlight the delta at this property and other properties in town. We've got significant delta on some of these unit mixes as well.
Yeah. So I mean, what's interesting is that the Lorry, if you go back, the Lorry is a much older deal. It's a 1970s deal, and they're getting also very strong rents. So I mean, there's no reason why Heritage is a nicer asset.
Mm-hmm.
There's no reason why we can't meet that and be like ours, Patriot Point. There's no reason why we can't just move it to market. And by the way, these are all the assets that are in town. There's nobody else in town.
Wow.
Yeah. So,
yeah, that's pretty significant delta there. So that's definitely a clean value add there, Yakov.
And in terms of the scope on renovations, this is some shots of Patriots Point, your other asset in town. And so are you following pretty similar scope of work on the unit upgrades to this?
Yeah. Well, it's pretty much it's a plug and play with our scope, and this is it. Obviously, we just tailor it to the unit, to the unit sizes, and but this is pretty much what we do. We put in new kitchens, put in granite countertops. Basically, we do sort of a Class A upgrade on the units, and we're getting tremendous feedback on it. And, we have the vendors to do this stuff, and it's ready to go.
Excellent. That's great. Well, on this value add project, again, strong cash on cash returns, overall return on a 5-year example investment, looking at high teens on an annualized IRR, strong equity multiple, really phenomenal as well. Some questions that we faced with some investors that we wanted to then address.
Yeah, absolutely. So This, as we have experienced, has been a really successful raise thus far, and I've had the pleasure. I mean, typically with our deals, they get funded extremely fast, and we actually hardly have any questions because we are focused on our bread and butter investments that project the returns that are very attractive. But with this particular deal, there's three phenomenal projects that we're taking down at once into a fund, and so we did have quite a few questions, and these were the common ones. So we wanted to make sure we addressed that to our investors on this webinar. So right from the top, we have the question: what is the term of this investment? So I'll go ahead and ask the questions, and Jacob can answer, or Yakov, you can chime in. But what is the term of this investment, Jacob?
Yeah, sure, TJ. They take the easy job on asking the questions. I understand. No, I'm just kidding. So so we have three separate projects, right? So there's unique business plans in each project. We have two apartments and a hotel development. But in general, we're looking at a 3 to 7 year term. So each project has business plans and options that you'll be seeing a return of principal through either a sale or refinance within 3 to 7 years. And kind of like we touched with earlier in this call with Yakov, is that we like to be positioned to succeed and maximize returns. And so that, depending on economic and different conditions going forward, that will dictate some of our strategy in terms of selling sooner or holding, doing a refinance, but yeah, 3 to 7 years is the projected.
Awesome. Yeah, cool. Very straightforward. Question number 2 is, how does it work if one investment sells before the others?
So how we set this up is that we're treating each project as a separate investment, and we have allocations 40% into each apartment and 20% into the hotel deal. So if one of these projects ended up selling, for example, then we would get a full return of our principal plus profits from the sale in that specific deal, and then our remaining investment being in the other projects.
Awesome. Thank you. Another common question is, will any unpaid preferred return accrue and be paid out in the future period?
Absolutely. And even on the hotel development, which comes with an 8% preferred return, the apartments have 7% preferred returns. Even on the hotel development, where it may be 18 to 24 months until there's cash flow from operations, that 8% preferred return will accrue and will be paid out.
Very cool. And how much are the sponsors co-investing is a common question that I've been asked. This is very important for alignment. So
yeah, on these projects, it's actually, we have significant amount of co-investment. And in particular, one of the reasons I love working with Yakov and Silverpoint Group is that they always have a significant amount of skin in the game because they have capital to deploy. And so on these deals, there's over 4 million in co-investment between the three deals, which is more than 15% of the capital being contributed as a whole.
awesome. That's great skin in the game. Okay, so the last question we have is, how much cash reserves are set aside for the projects?
It's a great question, and each project has from the onset cash set aside for reserves, prepaids, capital improvements. Between the two apartments and the hotel deal, there's actually over 6 million set aside. And then each year there's accruals, so accruing for CapEx, and there's over 70,000 being accrued each year to make sure that the deals are well capitalized. The hotel developer actually managed the pandemic with no capital calls on any of their projects. So they currently are owning and managing with partners 29 hotel deals and managed the entire pandemic without a capital call. I know that is pretty impressive because the hotel hospitality industry would definitely have their back against ropes a bit more significantly than the multifamily industry. So yeah, we like to get these deals lined up front, well capitalized, so that there's no issues down the line, or needs to do any type of capital call or anything.
Very good. Very good. Well, awesome. I think this is our final slide. We just wanted to thank you, Yakov, for investing time with us this afternoon. Very, very excited to be partnering with you once again on on other phenomenal deals. The ones that we have working with you in the current state has been doing extremely well. We've been very pleased and very excited for this opportunity as well. Appreciate everyone who has invested or committed with us thus far. This is obviously a very exciting opportunity with the 3 projects in one. We talked about a lot of key highlights, and one thing to reiterate is these are turnkey plays. We're working with partners that we've worked with in the past, and I love what you shared, Yakov, in regards to the location. Locations that have strong fundamentals and are positioned to continue to grow and attract strong net migration as well. And the assets are just phenomenal. So thank you so much. If there's any questions, I'm on the investor relations side as well. I've talked to several folks already with my counterpart, Neil Lindsay, who's also runs investor relations. So you can reach out to us via email at info@holdfolio.com or call our investor relations team in the number below here. But like I said, we have just a few percents left, a couple $100,000 for the raise. It should go by very quickly. So if you have any interest or questions, please reach out to us.
Thank you, TJ. Thank you, everyone. To learn more, see more details, and place your investment request, do that at holdfolio.com. And thanks again, Yakov.
Thank you very much.
Thank you.
Pleasure.
Bye.
Take care.